Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope everybody had a very beautiful day of trading. And in today's markets, guys, well, it was a crazy volatile day to say the least. In today's morning session, guys, we had a very big drop off. That was off the back of a manufacturing report that came in a bit lighter than expected. We'll cover that on the channel in just a few short minutes. But today's trading largely echoed Friday's trading, in which we had the very same pattern. Sharp decline in the morning and a very big recapture in the afternoon. Today, pretty much the exact same effect. Now, even though that manufacturing report did come in a little bit lighter, it did contribute to bringing yields significantly down here, guys, which is a very good thing. Huge drop in the 20-year yields by about 2.5%. And even on the 10-year as well, about 2.5% to the downside, desperately trying to clutch into this weekly downtrend, guys. And that's what we've been waiting for now for about 2 months, waiting for yields to set this weekly downtrend and really start kicking this monthly downtrend into motion. This is going to be very, very good for equities markets as soon as yields really start that tremendous march to the downside. So looking forward to that. And in other news today, guys, well, one of the greats is back at it again. Yes, we have another update from RoaringKitty, the person behind the GameStop movement 3 years ago, who returned to the space about a month ago, posting memes on Reddit and Twitter. Well, he has now disclosed a position, something he has not done in the last 3 years, and it is a very big position, guys. He posted this last night, Sunday night, and take a look at the position that he opened probably approximately about last week, right? Huge position on GME in terms of shares, 5 million shares. And he also has a heck of a large options contract position too, in the form of call options, June 21st, $20 calls on GameStop. The total position size, $210 million as of the Friday close. Now, obviously with GameStop's price action today, it went significantly higher. GameStop coming all the way up to about $42 intraday. And this, when people saw this last night, everybody was waiting for the futures open, which usually opens at about 4 a.m. for most brokers in the US. And this is the 4 a.m. candle, guys. Yes, from about $24 all the way up to about $45 almost at the top in the early hours of the morning. Unfortunately, GameStop just not able to keep it up intraday, but RoaringKitty's position went from this to this at the close here, guys. This is his updated position about 2 hours ago after the close. You can see he pretty much took it from 210 million all the way up to about $289 million this morning. Or rather this afternoon. This morning at the peak of this rally right here, this account would have been worth north of $450 million in one single trade. Safe to say, guys, he really has high conviction in this stock, and he keeps saying it, right? He likes the stock, but it really takes a big pair of you-know-what to have that size of a position, right? So very, very interesting things from RoaringKitty and from his GameStop updated positions. We will keep a close eye and a close watch on how things develop for that position specifically. So in today's video, guys, we're going to recap the manufacturing data that came out fresh this morning. Very, very light report. Not going to spend too much time on it. Then dive right into our technical analysis portion of the video, where we go through our major index rundown and our big tech name rundown as well. See if there's still some very good deals available in the market. And then lastly, guys, take a look into my portfolio to see which positions I have opened for this beautiful week. So without further ado, guys, let's get right into it. So SPY up about 0.08%, QQQ up about 0.54%, but it was really not green across the board. Very, very mixed day across the markets, guys. And you can see that best expressed by our heat map right here. Right? Big tech pretty much leading the way up. NVIDIA coming up over 5% after they announced new chips for the company, of course, right? But the rest of semiconductors not really playing along. Really NVIDIA show all over again, right? Microsoft down a little bit, and the rest of our big tech names had a decent day. But that was pretty much it, guys. Even though defensives and healthcare did play a decent portion in the day today, a lot of red in these markets nonetheless, especially the bottom half of the market, and even financials taking a little bit of a bath here. Now, in terms of the one-day relative, guys, you can see that even better here. Technology, healthcare, communication services, all in the green, but the rest of the market just not cooperating, right? This pretty much a little bit of a contrast, because last Friday, it was kind of the opposite, right? Last Friday, we had a lot of big tech names that were lagging behind, and the bottom half of the market put in a tremendous performance. Today, simply the opposite. So the moral of the story, guys, is rotation remains healthy. I always focus this on the on the channel because I really do think it's one of the most important aspects of the stock market as a whole. We really need to know, what is money doing? Is money staying in the market and rotating across different sectors? That is healthy price action. But if all sectors are dropping at the same time, well, it signifies that there's a lot of fear in the markets and that maybe a lot of larger players such as institutions are taking their money out of the market and going for a more risk-free trade such as treasury bills. But so far so good, as long as we continue seeing this healthy rotation that we have been having pretty much all year so far. No signs of red flags in the market just yet. So before we get into more technicals here, guys, let's go over that manufacturing report real quick, and you will see that it came in a little bit lighter than expected. So anything under a 50 read is going to be synonymous with a little bit of an economic contraction. Now, this is completely normal, guys. Interest rates have now been extremely high for over a year and a half at this point, right? So we do expect some economic slowdown to happen from that. That is the Federal Reserve's goal. They want to keep people from spending money. Companies alike have been saying the same things, right? In terms of consumer discretionary spending coming down, well, now that's why we're seeing it in a few manufacturing reports. These high interest rates are finally taking their toll on the economy. But in my opinion, guys, it's not a negative factor. It is actually a net positive. As long as the GDP numbers continue being positive, even though they are contracting a little bit, that's exactly what the Federal Reserve wants, guys. That is going to be what is going to bring inflation down to more manageable levels. And then eventually we will get those rate cuts. So that should be able to counterbalance the negativity that the economy is facing right now. All in all, not looking too bad. So the read came in at about 48.7. We were expecting 49.6, but the context of this, even though contracting, is very important, guys. This is the 3-year rolling data sets for the US ISM manufacturing. And you can see we have been under 50, guys, for a better part of the last year and a half at this point, right? No change there. We were on a slight uptick here since the month of pretty much November, but still never really managing to get back above 50, which would show an ever expanding economy. But we know this. We know the economy is not necessarily expanding. If anything, it's holding current levels or slightly contracting. So this is perfectly normal here, guys. No big red flags in my opinion. And when we take a look at the gist of the report, as a matter of fact, you can see that all elements of the report, because there's a number of different elements, guys, you can see that in terms of how we are in relation to most recent years, we're really not that bad, right? New orders, pretty much in line with where we've been in the last couple of years. Production, same thing. Employment, same levels. Supplier deliveries, pretty much same levels, right? No real red flags here. Inventories, slightly up a little bit, but really in the same line that we have been in the past few years. And it just continues, right? Customer inventories, relatively flat. Prices, we know those have been on the uptick ever since the start of 2024. No secret there. Backlog of orders, very similar to last 2023. And the list pretty much goes on, guys. Everything is relatively in line with how it was. So at a first glance, you may think that it was a bad data set. But in all reality, guys, we really are at the same locations we have been pretty much for the past year. So no major red flags, even though it does signify that the economy is slowing down. The economy is not getting crushed. It is slowing down at a very slow pace, which is exactly what the Federal Reserve has been wanting to do. That was why they increased interest rates as high as they did, to cool down the economy and get inflation under control. And it seems to be that the job is working so far. So now moving into our technical portion of the video here, guys. So let's go over our technical analysis here and see whether or not the markets are still healthy. So we obviously know right now we are in a daily downtrend for the SPY. The SPY is currently trying to recapture the most recent lower high at about 530.8. If they can engulf this completely, it would set them out nicely to reset this daily uptrend higher. As of now, simply daily downtrend consolidation, excuse me. So even if we get a bit of a move down here, guys, just going to be looking for a higher low to potentially reset this daily uptrend. A lot of space has been created since the lows on Friday at around 518.20, guys, talking about roughly 1.7% worth of wiggle room here to the downside. So fairly good. But even if, and I've been saying this now for a couple weeks running, even if the daily downtrend does continue in this region, I do believe it is just healthy weekly consolidation. You can see now for the third week in a row, we are consolidating sideways at the top. In other words, guys, this is a bull flag currently, right? We were looking for potential tag of the 12 EMA on the weekly. Haven't quite got it yet, but we've gotten close, right? So the bulls have a tremendous amount of space, guys, to set those weekly higher lows and resume trend. Anything above 494.84 pretty much just going to be looking for a weekly higher low for further trend continuation. All of your previous all-time highs is acting as support right now. That's why it is so hard for the bears to really plow down into this region before getting bid up hard by your longer term monthly bulls and your longer term weekly bulls alike. Now, moving into QQQ. QQQ also looking quite similar to SPY, so daily downtrend is in motion right now. The bulls are trying to put enough space to be able to reset that daily uptrend, right? The lows right here, 443.45, is the line in the sand level. Obviously, if we break this low, well, the daily downtrend simply continues, and our weekly consolidation simply continues as well. But as I maintain for SPY, guys, previous all-time high resistance is now going to be very heavy support for the bulls. We do have the 12 weekly moving average that is right here, and we really haven't lost it except for this little blip in time that we had last April. All in all, the bulls looking very good for the potential weekly higher low for that trend continuation. So this big green box right here, pretty much 447 down to 435, going to be very tough for the bears to get through, in my opinion, especially, guys, especially if yields continue a potential weekly downtrend here and really set the wheels in motion for this monthly consolidation. Equities are really going to love that in terms of if yields drop, equities should get a nice little bump. We also have the dollar, right? DXY also coming steadily down, which is a good thing for the markets. And the VIX, although we had a temporary little spike here back in April, still at very manageable levels now in the month of June. So everything looking very good, guys. No real red flags. Still a very solid environment for bidding all dips. Now, moving on to XLF. So financials not performing the best here today, 0.62% to the downside. But what are financials trying to do? They are trying to reverse into a daily uptrend, right? So one leg down, two legs down, three legs down. So where did we start the third leg? That's that guy right here, 41.61. We've now engulfed him, right? So what the bulls can do at this point, looking for that daily higher low for the potential trend reversal. Looking very good. We'll keep an eye peeled here, guys, on the 4-hour time frames for that trend change. If they can get this daily trend change done, they will have reset the daily uptrend successfully, and then we will be looking to potentially manifest a further leg of rise for the bulls right here. The weekly is still looking very healthy right now. Weekly uptrend, of course, looking for last week's lows to be the weekly higher low and move on to bigger and better things towards the all-time highs. Most financial stocks looking very good. One of my favorite plays right now, still in a little bit of a dip, is Charles Schwab. Charles Schwab looking very, very attractive at the retest here, guys, of the $70, $71 level for that continued potentially weekly momentum to the upside. Monthly also looking pretty good on Schwab. So any little dips down here in the 70 region, I really do believe are a great buying opportunity for a potential further increase in share price. So that's pretty much everything for financials. Now let's move into our healthcare sector. Healthcare sector really holding up the bulls on the SPY here today, almost on their own with QQQ, right? So looking very good on healthcare after such a disastrous drop to the tail end of last week. It's very nice to see that the bounce on healthcare is very, very, very healthy, right? So daily uptrend was in motion. Unfortunately, we lost that by cutting these lows right here, and it was up to the bulls to get the bounce size to be adequate enough that they create enough space to be able to reset this into a daily uptrend. Now, where are we rejecting from right now? Clear point that we had labeled on the chart for the past 2 weeks, prior support, going to be current resistance, and that's really where the bulls got rejected today. Take a look at the size of this bounce, however, guys. Very nice bounce, almost a 70% bounce. So the probabilities do favor the bulls whenever we do consolidate a little bit more to set the daily higher low and then make the trend change attempt, looking very good. The best case scenario for the bulls would be really able to mount above this region right here in the next few days of trading, engulf even more of the move, and then maybe use this line of resistance as some support before launching that leg higher. That would be your best case scenario for your bulls. But all in all, the bounce size looking very juicy, guys. If we do retest maybe these moving averages right here, that may be where the bulls look to make a further attempt at this resistance if ever they can't get the job done right around here. But all in all, looking very healthy, guys, trying to reset this into a weekly uptrend as well. No red flags at all. Moving into semiconductors now. Semiconductors not really doing amazingly today, but not doing too bad. 1.25% to the upside. The reason I said not too amazing is because it was really only carried by NVIDIA, right? We'd really like to see broad market performance in semiconductors, but we'll definitely take it, right? Semiconductors, one of the sectors that never lost the daily uptrend whatsoever, beautifully tagging the 12 EMA and our previous areas of all-time high, right? This yellow line, tagging them gorgeously on Friday and today's trading. So still just looking for that daily higher low and trend continuation. Seems as though the daily higher lows are set right here, and we will be looking to push the trend higher. If ever we fail for whichever reason and reset into lower lows, daily downtrend, well then guys, we have so much space on the weekly to set a weekly consolidation higher low and move on to the furtherance of the weekly uptrend. Keep an eye on this level right here for any larger form weekly pullbacks. 233 down to about 222. I do believe the bulls will be able to put a stop to this. Gorgeous support level, previous all-time highs, and the 12 EMA on the weekly just sitting right there, ready for that dip buying opportunity. Now moving into IWM Russell. IWM Russell looking not too bad today, right? 0.56%, really an inside candle. They got a lot higher before giving a lot of it back intraday, right? Really a brutal sell-off on the morning. After pre-market hours, we were looking very, very good as the risk on appetite was kind of fed through the GameStop trade, but unfortunately not able to hold up the gain. So the Russell's still looking a bit messy, right? Daily downtrend, and now the bulls are trying. They've got an engulfing move going here, trying to set the daily higher low, trying to recapture that daily uptrend. That would really be a break of today's highs, roughly around 207.58. So we'll keep our eyes peeled on that. But if ever they can't get it done and continue consolidation, guys, you know the drill. Just looking out for the weekly higher low for the potential second attempt at this 212 region of resistance. Very big prior support. That's why it's acting as such big resistance too. So the bulls just patiently waiting and biding their time, accumulating some momentum to potentially make another run at this. If we get significant declines in yields and the weekly downtrend really starts manifesting over the next 2 weeks, that is when I do believe the Russell will try to make the most of it and try and climb above that 212. Now, lastly, looking to the Dow Jones. Dow Jones down about 0.3%. It could be worse, though. Dow Jones still trying to get its bounce attempt underway, right? But as of now, the size of the bounce, guys, is relatively weak. Not even bouncing, 28, 30% worth of a move, right? So very weak bounce so far, but the bounce is not finished. The bulls still do have hourly uptrend control, so we would need to see them really start kicking it in gear, kind of like our healthcare bulls did, right? We need to start seeing that from the Dow Jones. How do you know the bounce is very healthy? Well, we need to see at least a 50% retracement, guys. If we can get back up to around 39,000, it does give the bulls a chance to reset into a daily uptrend, right? And that would be probably using this current level right here that we're bouncing from, right? This whole 38,500 down to about 38,300. This whole previous line of support right now could be interesting if the bulls are able to use this green box right here, right? Come above, use it as support, and then mount the rally ever so further. That is the best case scenario. The worst case scenario is the bulls top out here. We're unfortunately not able to get it done, and we revisit the lows. At that point, daily downtrend will be on the table and just going to be looking for extended weekly consolidation. The line in the sand, however, is 37,600. Would not want to lose that, guys, because that would be synonymous with weekly downtrend into further monthly consolidation. As of now, though, we're not there yet. The bulls have a lot of space, so let's just take this one day at a time for the Dow Jones bulls. Now, moving on to a bit of crypto, because I didn't cover crypto in a little bit of a minute, so let's do it now. So Bitcoin still trying to break out of this tight range pattern, right? Bitcoin did a very great job a couple of weeks ago of breaking above our huge line of resistance, that yellow line, prior all-time highs. Now we're kind of just sitting on it, right? Sitting there, sitting on the moving averages as well. So what we need to see, right, since we are in a little bit of daily downtrend right now, need to see the bulls engulf this move and reset into a daily uptrend. As of now, just healthy sideways consolidation in my opinion, and you can see it even best expressed on the weekly time frame, right? Weekly downtrend, nice engulfing move to the upside. We're looking to set the weekly higher lows and potentially manifest a further rally. Once again, Bitcoin is part of the risk on trade. So I do believe that if yields really start downtrending hard here, that will be one of the big catalysts to really bring Bitcoin up in a significant fashion. Also the dollar, since the dollar is so closely tied into yields and Bitcoin is obviously an expression of the US dollar. If dollar and yields really start coming down quickly, expect that to be a nice catalyst for a push up on Bitcoin. Ethereum now, Ethereum really holding up gains performance tremendously, right? After this ETF approval headline a couple weeks back, really doing a great job of holding the gains at the higher levels. Just a very tight range of consolidation. Obviously, what you'd want to see is the reset of the daily uptrend. That would be a break pretty much of today's high, the lows, right? So low, high, higher low, higher high, daily uptrend would be started. That's how you would know that the bulls are maybe trying to make an attempt at the weekly push. However, if we continue consolidation, guys, I've labeled this green box on the chart to be the likely area that I think the bulls are going to put a stop to the bears. 36.70, roughly down to about 35.20, right? Prior big resistance right here should be acting as support. And a matter of fact, they did use it as support after the initial move to the upside, right? So looking very good, even if we do get a little bit of a pullback. You guys know the drill. Just looking for the weekly higher low to potentially reset into a glorious weekly uptrend after being stuck in this weekly downtrend, guys, for close to 2.5 months. So no red flags at all on crypto, looking quite bullish as a matter of fact. Now let's get into our big tech names, shall we? Give me a quick second. And we're off. All right, so Apple about 0.93% to the upside. Apple has its investor presentation day where it's set to release new AI products. That's coming up in 2 weeks, guys, June 14th, if I'm not mistaken. So there's a lot of bullishness coming into that potential catalyst, right? Why? Because if Apple releases very, very nice AI-oriented products, it could signify a massive refresh or a massive upgrade cycle for the average consumer. Obviously, between the iPhones 12, 13, 14, 15, yes, we have had decent upgrades in terms of the functionality of the telephones, but not really anything groundbreaking, right? It's just been getting incrementally better. So this suite of new potentially AI-oriented iPhones could be that one thing that makes 4 generations of iPhone consumers pivot and move to the brand new shiny product, right? So that is what Apple is banking on. That's what a lot of investors are banking on. That's why you have so much bullishness on Apple leading into this event, because that could really put an end to Apple's iPhone revenue slump that they've had in the last 2 years. So very big catalyst coming up. That being said, guys, we're approaching a big area of resistance right now, coming into our prior all-time highs, and the bulls seem to be getting a little bit tired, right? On the RSI, we're getting slightly overbought, and it's getting a little bit tough to push into these higher levels. So it's, even though we're in a daily uptrend here, guys, going to be looking for the daily higher low, anything pretty much above 186.66, daily higher low for potential further trend continuation. But if Apple ever decides to take an extended breather worth of a break for the 2 weeks before its event, well, then we could just be expecting a weekly higher low. Now, guys, we're significantly above the 180 to 178. I really don't think we're going to get this level. It was a great trade idea. However, the market just didn't come back and fill us, right? So what we could be expecting, a more realistic level, is maybe something like a 186, 185, where the moving averages are. So if you say a little bit of a pullback here on a weekly basis, maybe even 2 weeks down to 187, 185, I would not be opposed to making a weekly higher low trade right here and maybe riding it past the all-time highs. Going to be trying to get in as at the best pricing I can find prior to that event, because I do believe that the June 14th catalyst for Apple should be a very bullish event. All in all, though, guys, this chart is looking absolutely glorious. No red flags at all. The bulls are in full control. Moving on to AMD right now. So AMD was having a very great morning. As a matter of fact, they opened close to about $170. And unfortunately, guys, top to bottom, you guys know AMD does this a lot. Unfortunately, 6% decline, ending the day roughly 2% to the downside. So AMD, once again, really struggling in this level. We're battling with 2 key levels right now, right? The first level we're battling with is these guys right here. This whole 170 region proving to be very, very challenging for AMD to really mount and close above. And then to the downside, guys, we're really using this prior support range as the current support range. So AMD is kind of trapped within these 2 levels right now. But you guys know when we get sideways price action for a considerable amount of time, usually the break to the upside or downside is quite volatile. Now, we do come into this with a fairly bullish lean. Why? Well, because AMD is simply part of the larger semiconductor trade, which is a very bullish trade right now. Monthly, weekly, daily bulls control that ETF as a whole. So I would not be surprised to eventually see AMD break out to the upside. We would need a confirmation break 173 and close above, you would have your new daily uptrend, and then we would really be attacking the 180, 185 zone. However, to the downside, guys, I still do think that it represents an amazing trade opportunity if ever we revisit these lower levels here, guys. 157 down to about 150, that is a juicy, juicy pocket, because I do believe if we do come down there, it'll just be for a weekly higher low for a potential weekly trend change attempt in the month of June or maybe even July. So I will continue to play AMD quite aggressively in the whole mid 150s to about mid 140 range. Moving into Amazon right now, Amazon recovering nice here today, 1% to the upside. They were actually down on the morning, but did a great job of trying to recover. So Amazon is currently in a daily downtrend. The bulls are looking to create enough space off of these lows to eventually be able to reset that. Where are we rejecting from to the downside, guys? Well, you guys know it best, right? Prior all-time high, big resistance. That is what's now acting as support, which is why I do believe Amazon in this location right here, phenomenal swing trade opportunity, talking about 177 down to about 166. Anywhere in this 10-point range, in my opinion, will be heavily rewarded in the months to come. So as of now, still just waiting for the bulls to really manifest this daily uptrend to take back, and we are pretty much trying to bottom out on these charts right now. In terms of the weekly, guys, the weekly is extremely healthy, right? Glorious weekly uptrend right now, just trying to set up for the weekly higher low to get that weekly trend back in motion. Anything above 166, just going to be looking for that weekly higher low to continue this trend. So still a lot of space for the bulls, no real red flags, not in jeopardy of losing any higher time frames. Moving into Google right now, Google also with a nice little green day, 0.26% to the upside. Google still in a little bit of a daily downtrend here. So if ever we get lower high, lower low, is that big of a deal? Not really, guys. Just looking for healthy weekly consolidation. Anything above 165, just looking for that weekly higher low for the further trend continuation. This would be the region where I'm more comfortable playing Google in, talking about 169 down to about 165. If we can revisit some of the lower 170 regions right here, that may open up this trade location, which is pretty much the gap fill area from the prior earnings. That's where I want to be writing some short puts myself. All in all, though, no real red flags. The bulls still largely in control of your monthly uptrend. Look at this beautiful monthly uptrend. Weekly uptrend as well, and the daily, even though we are in consolidation, is not looking too bad. Now, moving into Meta with a very nice day to the upside, 2.28%. Meta came dangerously close to losing these lows last Friday. Pretty much a stop hunt attempt by the market makers, perhaps, right? Clearing everybody out who had stops below here. Now looking good, but still trapped in this range of consolidation. We're really battling with the moving averages right now. We're pretty much on top of them, battling with this overhead resistance level at about the 182 mark and the lower bound of our support region, which is currently around 461. So Meta, similar to AMD, when you usually see stocks coil sideways like this, usually means that the break is going to be quite volatile one way or the other. So the volatile break to the upside, what we're looking for, of course, is the break of 482. The trade opportunity I may be looking for is if we do break it in a convincing fashion, then come back and retest this location right here. This is where I will be going long. The take profit is going to be well beyond the all-time highs, and your stop loss comes below these lows right here. So very decent trade opportunity for Meta. That being said, if ever we fail and come back down towards the 450 level, I will be waiting, guys, because we're just going to be looking to set the weekly higher low for potential weekly trend change back to the bulls. All in all, juicy trade setups, guys, whether we break higher and retest or whether we break lower towards the 450 entry, very juicy trade opportunities all around on Meta. Moving into Microsoft right now. Microsoft down about 0.39%, but rejecting very nicely from the previous range of consolidation. That's why I've kept this range on the chart, guys, pretty much since the month of February, right? You can see bulls still reacting from these levels, not wanting to give back too much. So on Microsoft, daily downtrend is in motion, yes. Now we need to wait for the size of the bounce from the bulls and really get back above, clearly back above this level right here, 415.50. Keep an eye on your hourly time frame. Still no confirmed daily uptrend by the bulls or hourly uptrend by the bulls, right? Still just really volatile sideways action. So as soon as we can get that trend change, the 4-hour is looking good for it. As soon as we can get that hourly and 4-hour trend change, daily bounce will be underway. And then if the bulls can get at least as high as about 423, 424, gives them a very good chance, reset the daily uptrend, use this location as support once more, and then run. This could be a very juicy breakout retest trade opportunity for an entry for the Microsoft long. So looking very forward to it. And to the flip side, guys, if ever the bulls give back too much of the move and we continue manifesting into this continued daily downtrend lower, right? Well, that's not too big of a deal, guys. Just zoom out to the weekly. Weekly looking fantastic. Just looking for that weekly higher low, anything above 389, looking for the weekly higher low for further trend continuation, looking very good on Microsoft. Now moving into Netflix. Netflix pulling back a little bit on the day, but not too big of a deal, guys. Where are we pulling back into? Very, very nice area of support. Prior resistance, now going to be acting as beautiful support. Moving averages are there as well. Going to be very tough for the bears to get through this one, guys. So what are we looking for? Daily uptrend was in motion. We have now since lost it, right? We've cut the lows right here, but the bulls have the ability to take it back, right? We're really using this support zone very, very well right now. And I would not be surprised if, even though we've cut the lows, guys, could be a double bottom and rally if the rest of the markets stay green throughout the rest of the week. All in all, no red flags. If ever we fail this attempt and set the daily downtrend, you guys know the drill. Zoom out to the weekly and you will see that the bulls have so much space, guys. Anything above 544, looking for that weekly higher low for further trend continuation. Lower area of this region right here is maybe where I want to play Netflix. Talking about 610, 605. If we retest that area, could be a very nice swing trade opportunity to manifest to the upside. Moving on to NVIDIA now. NVIDIA obviously having an amazing day, almost up 5% after releasing their new suite of chips. So fresh off the board for NVIDIA pretty much, and the market just absolutely loved it, of course. So daily uptrend, no secret there. Very, very healthy daily uptrend in motion right now. If we do crack the all-time highs, daily uptrend simply continues at that point, and any pullback just going to be looking for a higher low, anything above 1,067, higher low for further trend continuation. No red flags, guys. Just really tough for me to say anything bad about this stock when the bulls are in such clear control of every single time frame known to man, right? Even the shorter term time frames, no red flags whatsoever. Even if we were to fail this double top and reset into a lower low, guys, yes, it would suck, but the bulls have so much space on the weekly to set the weekly higher low, guys. Anything above 758, looking for that weekly higher low for further trend continuation. Even if we do get an extended pullback, guys, I don't think we're going to retest the previous all-time highs. A little bit too far away for now, right? That's all the way about 16% away. That would be a heck of a drop. Don't think that's going to happen. Maybe the best that we can get is potentially a tap of the daily 12 EMA right around here, around 1,050. Moving on to Tesla right now. Tesla down about 1%, but really trapped in this region, right? Really no price action movement by Tesla. Same thing when we were talking about AMD coiling up, right? Meta coiling up. Tesla doing the same thing, guys, coiling up. So when it breaks, whichever way it breaks, it is going to break hard. Hopefully for the bulls, this does break to the upside. If a break to the upside does come here, guys, I truly believe that the bulls are going to aggressively be hunting for the high 190, 200 region. Your daily uptrend will be fulfilled, and then your second leg of weekly uptrend could now finally be in motion. But the bulls, not out of the woods yet, guys. The flip side is very important too. If we lose this level right here, 173.11, unfortunately, daily downtrend is started, and then we'll be looking to our lower area of support, guys, to really play as the line, last line in the sand level of defense for your bulls. Why is that so important, guys? Because if we lose the whole 170 mark, 165 even, it would be a weekly confirmed downtrend. And unfortunately, that would just undo all the beautiful weekly structure that the bulls have done over the past month and a half. So keeping a very close eye on Tesla. One thing's for sure, though, if we do start coming down into this region, I will start playing Tesla short puts, probably somewhat aggressively, 160 and below. So let's keep our eyes peeled for Tesla and watch which way this one breaks, because when the break does come, it will come hard and there will be continuation in either or direction. Now moving on to Palantir. Palantir, also one of our names that's just really coiling sideways. Started off with a very nice Friday session last Friday up to 22.13 and now coming all the way back down to 21. So really nothing has changed. What the bulls are trying to do, they are trying to get a daily uptrend going, but cannot get it done, guys. We need a close above 22.17. If that happens, your daily uptrend is finally reset in motion and we can start thinking about attacking the higher $23 level. As of now, just sideways consolidation, right? The area that you do not want to lose, however, is this lower bound right here around 20.4, 20.5. That would be bad because unfortunately it would signify that your weekly downtrend is restarted anew and that monthly consolidation is simply not done yet. We've been waiting for the monthly higher low now for pretty much the fourth start to the month, right? Or rather 3 months, and now starting off for the month number 4. So healthy consolidation, big prior support, prior resistance as well. So big area of support. I do not really think the bears are going to get through the lower parts of these levels, but also doesn't mean to say that the bulls can just sit back and do nothing, right? Eventually, we will need to manifest some sort of a rally towards the 23 level and start reversing some of this weekly time frame damage that's been done over the past month. All in all, though, you guys know me, I will keep playing Palantir in these lower levels the whole time that we're down here. And now lastly, PayPal. So PayPal trying to mount a little bit of a rally after retesting our dangerous area of support last week, trying to get back above, right? So at least now we have an engulfing move, right? So daily downtrend was started, engulfing move. Now the bulls will be looking to reset this into a daily uptrend. Although we are above our area of support, I need to see a little bit more from the bulls. If we can get over and above all of these moving averages, keep in mind the green one right here is the 200. It's an important level. So if we can mount above and then maybe reset, use the moving averages as a support and reset into a daily uptrend, that would be significant progress from the bulls. Because as of now, guys, unfortunately for PayPal, they did at the end of last week set a weekly downtrend in motion, right? Unfortunately, that is just the case in point for PayPal. So now they have a lot of work to do, guys, to reset this into a weekly uptrend. Not looking too bad, though. I will bid this stock. If for whatever reason, guys, we start revisiting these lower $60 levels again, well, that's when I'm going to be bidding probably 59, 58, the lower range of support. Just now for PayPal, a little bit too much uncertainty for me. And at these same dollar prices, roughly, you have a company that's growing a lot faster in the name of Square. So that's been the one that I've kind of pivoted to, even though it hasn't been performing well over the past couple of months or so. There's such a strong base of support down here, and the company's growth metrics here, just on a personal preference basis, the company's numbers are a lot better than PayPal's, and that's just my humble opinion. So that's pretty much everything for your stock market recap today. Now let's jump into my portfolio to see the trades that I made. All right, guys, so taking a look at the positions, you will see that not much has changed, but since I didn't give you an update from Friday for the positions that expired worthless, let's just go in through those for right away. So we did have a few positions that ended worthless in the end of Friday's trade. You can see the AMD 160 puts, completely worthless. AMD expired above that, of course, on the Friday session. The Amazon 177.50s for me were assigned. So now you see I'm a proud shareholder of Amazon at 177.50. Obviously, we collected about 75 cents worth of premium, so our break even is actually around the 176.75 mark. Now, we did write some covered calls on the position today, and we got just over 1% for them, right? So 191. Didn't get the top end of Amazon today. You can see the pricing towards the close is a lot higher than that, but I'm fairly happy with the pricing that I did get. So that's pretty much everything for the Amazon position. We'll ride that one. I could have probably waited a little bit more, but do keep in mind, guys, I do have a leap call option on Amazon. So I'm not, even if Amazon runs, I'm not really left behind. We still do have this leap call option in play right now. Now, moving into Fortinet. Fortinet was another one that expired pretty much out of the money for us last week. Fortinet ending above $58. So we just collected all the premium there. SoFi, $7 calls. SoFi ended below $7. So we just collected all of the covered call premium. Going to be looking to write some more on SoFi. Couldn't find the best pricing today. So maybe give it another day or two and see what happens with those. And then we had these Square $68 calls. We had about 30 cents for them last week. Those expired worthless because Square is still under $68. Our break even on Square now is closer to the $67 mark after farming premium for the past couple of weeks. Still have not written any covered calls on that position. Actually, as a matter of fact, I did. I wrote the 68 calls for about 23 cents. It wasn't doing too much, and the markets were very, very volatile today. So I pretty much saw a little bit of a price action increase here into the early morning, and I did ended up taking it right around the $64.25 mark. Now the markets did end, it did come a bit higher than that intraday, but that's okay, guys. I didn't get quite my 0.5% rule. If you ask me, I don't really think Square is going to come up and close above $68 by this week. So just collecting a little bit of premium, guys, even if it is under 0.5%, I'm not too upset about it. If anything, I'm looking to actually dollar cost average even more Square if I can find some good premium at $61 or below over the course of this week. So that's pretty much everything for last week's recap positions. Now you'll see that the ones for this week are pretty much the same. We currently have some $22 covered calls on Palantir. Our break even on Palantir is under $20 right now. So if we were able to get called away at around 22, we'd make about let's call it about $2.10 per share. Times 6, that'll be a very healthy $1,200 from being assigned on Palantir roughly 3-4 weeks ago at this point. So we're really making good premium on this position. Then the rest of the positions that we opened today are pretty much all featured from the top 5 options play video as of last night. So we went a little bit of aggressive on the AMDs. We went for the AMD 157.5 puts. Now I really didn't get the best pricing on AMD that they had throughout the day. I'll be honest with you guys. I pretty much wrote AMD when it was down here around the 164 mark early on in the morning, and it dropped even further over the course of the day, right? So I could have gotten even more pricing if I was a little bit more patient, but I really like this level nonetheless. Found some good premium at the 157.5s, and it is below our expected move. The expected move for AMD is about 159.11 for the week, so we'll see how this position maintained. Fairly happy whether I get assigned or not, guys. I got good premium for it, and I like the stock at that level. Now, also the Amazon covered calls we talked about, no secret there. This CELH, this is one of the bonus plays I was looking out for, and you guys saw what happened to CELH today. Unfortunately, the stock went down about 6.23%, so I was very patient with this one, guys. I saw it drop early on in the morning, but the options pricing was kind of all over at that place. I was trying to get filled down here, but it just wasn't filling me, right? The spread between the bid and ask was very, very wide. So I waited. I patiently waited if ever we had a little bit of a retest, and I saw it towards the end of the day here in the $75 region. So I wrote the calls, wrote the puts right around here. We have these $70 puts for about 36 cents. That's roughly 0.5%, and we still do have a good amount of cushion, right, before the $70 range. But that $70 range is right in line with where I want to be picking up the stock. So we'll see exactly how this one closes throughout the week. Then we wrote some Uber 61 puts as well. So Uber was also featured one of my bonus plays too. And we wrote the 61. That's exactly what we're looking for here, guys, right? 61, $60 region, as close as possible to my previous line of support, which is pretty much your all-time highs. So if Uber does come down there, we will buy 100 shares at $61. But for now, not looking too bad whatsoever. A few plays that were up for consideration here today, guys. I really wanted to find CRM, but CRM unfortunately just did not dip back down, so wasn't really able to pick up that one. Another one I was looking at was Airbnb, but Airbnb also not really giving me any entries below the 141 level, so wasn't able to pick up those. And even a stock like Fortinet. Fortinet, I was actually looking forward to playing this one, but didn't really have much of a drop. Now, keep in mind for Fortinet, we do have CrowdStrike earnings tomorrow, which could affect the company, but the reason I did the reason that I did advise myself for wanting to take this one is because Fortinet, if I can get a strike, let's say 57, 56, and we have a dip after CrowdStrike, guys, I do think that'll be a nice DCA opportunity for me. And I'm looking to go at least 2-3 contracts if we can pull back down into the mid $50 range. Huge area of support. And you guys know me. Love playing Fortinet in this lower level right here. So I stayed pretty much patient today, guys. Yes, we did open a few positions, but not all the positions, right? It was a very volatile day. There were some dips to be had, but just not exactly on the companies that I wanted it to. One of the ones that I really wanted, which is big buying power for me, was Meta. But unfortunately, Meta was simply all up today. And even Microsoft, guys, Microsoft, I was looking at it down here around the 410s, right? I kind of wanted to put a bid for maybe the 405s or something like that, but I just didn't do it. I was kind of waiting to see whether or not it would lead into the rest of a red day for the markets and maybe into a red Tuesday. That's why I kind of held off on Meta and Microsoft just because they are such big positions. I really need to hit them adequately, right, at the desired levels, or if not, I just kind of stay away from them. So still got a lot of buying power here, guys, today. Probably gonna fire off a couple more trades tomorrow, depending on the market, obviously, and we'll just see, right? We're patient. We have our plays, all the plays that I want, always monitoring them. So we'll take this one day at a time. But so far, not a very bad start to the week at all. And we're even starting to make a lot of money back on the CRM position right here. These leap calls, right? They've come back significantly, pretty much up $1,000 from last week's lows. So we'll try to do our best to recapture as much premium as possible on CRM. That's why I'm looking for a little bit of a red day here on CRM. I really want to play some short puts, guys, around the 220 level, right? That will be a very, very good start to starting to DCA into the position, starting to farm premium, starting to make some of those losses from last week back, right? So that's pretty much everything I had for you guys in terms of today's video. Hopefully you guys enjoyed it. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new here, guys. We do these videos every single Monday through Friday, and I thank you so much to each and every one of you, all 1,600 people who have subscribed to the channel so far. You make the journey so much worth it. I've had so much fun over the past year, and we're going to do so many more videos to come here, guys. And as usual as well, if you have any questions whatsoever, stocks, technical analysis, anything you want, please leave it down below in the video description or in the comment sections, and I'll get back to you as soon as I can, usually within the first day. So take care, guys. I will see you after the close tomorrow. Peace.